Think back to school. You spent thousands of hours memorizing historical dates, mapping out geography, and solving complex algebra. But when it came to money, the most critical survival tool for the real world, the curriculum was totally blank. No one taught us how to earn it, grow it, or multiply it. Without that education, millions of graduates walk straight into a mechanical, lifelong financial trap. The cycle is predictable. You receive a paycheck, only for taxes and EMIs to immediately siphon off the bulk of it. You save whatever tiny fraction remains. This loop repeats relentlessly for 4 decades, dictating your life until traditional retirement. Working hard inside this broken system guarantees lifelong financial stress. To reach freedom, you have to break the machine. Most families rely on extreme frugality as their primary path to security. You save every penny, fill out a deposit form, and lock the cash in a bank account. This strategy ignores inflation, the invisible wealth destroyer that quietly erodes the value of static money. Consider a 10 lakh fixed deposit. While the number on your statement remains the same, your actual purchasing power plummets over 20 years. Over 50 years, that same 10 lakh buys almost nothing. True wealth requires finding vehicles that grow faster than the annual inflation rate. A pure saving strategy is mathematically designed to make you poor. The objective must shift from hoarding cash to outpacing the rise in the cost of living. Escaping the rat race requires a single mental shift. You must learn to distinguish true assets from disguised liabilities. A 15 lakh luxury car, like a Thar, is a liability in disguise. Over 5 years, the fuel, insurance, and maintenance costs combine with a 50% depreciation hit to create a massive net loss on your capital. Compare that to deploying the same capital into a rental property. In those same 5 years, that property can generate 9 lakhs in rent, while the underlying asset appreciates in value. You've created a net profit. This logic applies even to the house you live in. If it drains your cash flow monthly for EMIs and maintenance, it functions as a liability. Building wealth comes down to a simple mechanical difference. True assets put money into your pocket without your active labor. Liabilities take money out. You have to engineer your cash flow. Most people follow the cycle of earning, spending, and saving what remains. The wealthy prioritize investment before they ever touch their paycheck. Once you have a primary income, divert a fixed percentage straight into a sealed investment tank before any lifestyle spending occurs. When those investments generate returns, the profits are fed back into the system rather than being spent, which causes your capital to compound. Many try to bypass this process through betting apps or day trading. These shortcuts almost always result in a total loss of capital. Escaping the trap depends less on the size of your salary and more on how you control the direction of the money you already make. Tax structures create a major hurdle for the salaried class. As an employee, the government taxes your earnings immediately, and you survive on what is left. Business owners utilize a different legal strategy. They earn their revenue, deduct expenses first, and pay taxes only on the remaining profit. Starting a side hustle allows you to legally classify day-to-day costs like travel or phone bills as business expenses. Utilizing the tax code is a structural requirement for retaining wealth. It ensures you are working for your own future rather than solely for the government. Forget the imagery of private jets or vaults of idle cash. Financial freedom is a binary, mathematical state. It occurs the moment the passive income from your assets exceeds your monthly expenses. If your life costs 1 lakh a month and your investments yield 2 lakhs, you are free. Your active labor is no longer required for your survival. Reaching this point requires time and the compounding power of the market. Do not wait for the perfect market or a bigger paycheck to begin.